please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Robust performance, whether it's growth or profitability or asset quality. So I'm just going to touch upon the headlines of all these three vectors. In terms of growth, I think we had very robust growth, both year on year and more importantly quarter on quarter, a very strong growth. So whether it's top line or bottom line. So if you look at growth parameters, then our loan growth went up by 29%, and that was supported by corporate loan growth of 30% and a retail growth of 28%. Growth-wise, you see that even in retail, both vehicle finance and non-vehicle retail showed very handsome growth. We've talked about the surge in the growth of our vehicle finance businesses, where this quarter disbursements of loans went up by 82% in the commercial vehicle sector, and for the industry as a whole, that is our portfolio as a whole, it went up by 52% disbursements. So portfolio as a whole on the vehicle finance grew by 28%. Corporate I've already told you, so pretty handsome loan growth, and certainly well above industry deposit growth, which was 19%, and quarter on quarter it was 5%. And similarly, I think quarter on quarter we've seen very good growths on net interest income, which grew by 6%. Fee income, core fee income grew by 5%, revenue grew by 5%, and profit after tax grew by 9% quarter on quarter. So growth-wise, I think all around good performance. Also CASA. CASA was Y&Y growth of CASA was 37%, and within CASA the savings bank growth was as high as 51%. CASA as a whole stands at 44% for us. So growth-wise, I think good. Bottom line also, both operating profit and net profit grew pretty handsomely. For the year-on-year, net profit grew 24%, and quarter-on-quarter it grew 9%. In terms of profitability also, you're seeing all the vectors have improved. ROA went up by 5 basis points to 1.91. ROE has also moved up about 100 basis points to 17.25. Net interest margin, there was a little shrinkage because of the lead lag between the pricing of the books. The MCLR came later, and there was some increase in the cost of deposits. So NIM came in at 3.92 against last quarter of 3.97. I think. So ROA, ROE, earnings per share, all improved. So the profitability also showed. Cost to income ratio actually fell also. Cost to income ratio came down to 44%, which was actually our target for March 2020. We had said we will reduce our cost to income ratio by 200 basis points to 44%, so we are at slightly above 44%. And I think most importantly, asset quality. Asset quality, there was a pretty robust improvement in the quality of our loan book. Gross NPAs at 1.15 were lower than even last quarter, and probably are amongst the lowest in the industry now. Our credit cost fell from 19 basis points last quarter to 14 basis points this quarter. And most importantly, slippages is one area where we all also focus on. Slippages is the additional gross NPAs. They fell from 2.68% last quarter to 1.31%. Apart from that, our restructured book is now as low as 5 basis points. So there's hardly anything left in the restructured book as well. And our asset reconstruction with the sales to the ARC is down to 0.3%. So overall, I think asset quality has shown a pretty handsome sort of improvement. Apart from that, we have added 1 million new customers during the quarter, and we are now at a total of 12 million customers. I talked about earnings per share. Analyzed the earnings per share are now 69 rupees, and for the quarter it was 17.25. Other than this, the branch expansion program is going apace. What you see is that only 10 new branches were handed over during the quarter, but a lot of them are works in progress. So we are well on our way to achieve our target of doing 200 branches plus during the full year. So that's a summary of the headlines. Net profit growth of 24%. I think the only other issue to be mentioned is that the profit growth, core profit growth is actually 33%. If you take out trading income, and I think the profit would have been even much higher, but for the fact that you know that GSEC has created a sort of GSECs which were sitting on very large profits for the industry as a whole, because GSECs went up by as much as 50 basis points during the quarter. That eroded a lot of the profitability of the banking system. There was a mark-to-market loss of 86 crores, which we have provided for fully, and we have not used the amortization dispensation which has been given by the regulator of that. So we have made a full provision of the mark-to-market loss at the end of the quarter, which for all product categories came to 86 crores, and we have made a full provision of that. So that's a summary of the quarter's performance, and we open to take questions.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Participants on the audio call, if you wish to ask a question, you may press star and 1 on your phone. When the time the questions queue up, I would request to take the questions from the venue.
Yeah, will you please put these questions on the queue, because there are questions being asked here also.
Yes, sir, by the time the question queues up, you may take questions from the venue.
Yeah.
I just want to take off from the point where you stopped, that was about MTM losses. Could you give us the outlook of the coming quarters? We still see rupee under pressure, and how do you think this will pan out in the coming quarters for IndusInd Bank? How it will play out for your MTM positions going forward?
MTM positions, see, MTM position relates to government securities. Our holding is really on government securities. Rupee depreciation has got nothing to do with it. The rupee volatility actually is an opportunity. And it's reflected in the FX profits that we made. Foreign exchange profits were pretty handsome during this thing. MTM, I think, although there are market expectations of some more sort of policy rate movements, this thing, but I think the depreciation on G6 already, quarter alone, it was 50 basis points. If you look at a 1 year period, there is probably 150 basis points. Our own view is that G6 will remain in this particular range now. So I don't expect any more MTM losses. Depends on what you are holding in your portfolio, right? And how much you are holding in the trading book. Our trading book is pretty small.
Also talking about growth, this quarter has been very strong. Do you expect to continue the pace at which you saw the books grow to continue in the coming quarters, particularly corporate and retail?
Yes, we are seeing a very strong throughput through our book. In fact, we grew 29% after selling down something like 8,000 crores through participation and through the bill rediscounted scheme, which we sold down to other banks. So actually the growth was much higher. We are seeing a good throughput on all the 3 drivers of our loan book. Our vehicle finance book, very handsomely growing. Our non-vehicle retail is growing well. And of course, corporate is growing at 30%. So our outlook is that we've always said that we will grow in that 25-30% range. And I think we are well set to stay in that range.
Where is the growth coming in from? You did mention the various sectors, the pockets that it's coming in from, but what really is holding the growth? More so because at this point everyone is talking about headwinds in the microeconomy, we are talking about headwinds, macro challenges as well. So what really is providing support to the growth and giving you optimism and confidence that this will continue in the coming quarters?
See, overall credit growth for the industry itself has grown pretty handsomely. I mean, a year ago it was 5%, now it's 12%, right? And as I said, the main drivers, you see vehicles. Vehicle finance is growing so robustly, and we feel that there is more to come because there are certain sectors which are building up now. For instance, the construction sector is starting to build up. The construction sector pulls a lot of vehicles. So we see, I think, more demand coming in. So that's one reason why we feel that the vehicle industry is in for a bull run for at least another 2 years, if not more. So that's one. On the non-vehicle retail, our portfolio is diversified. We have 8 or 9 products, and all these products, whether they're personal loans, credit cards, loan against shares, etc., all are growing well. The corporate book is more diversified, and there are certain sectors which are pulling credit. I think part of the credit is going into acquisitions, which is, for instance, the NCLT-linked sales which are happening, funding those. I think that's one sector. We are seeing very good demand on power transmission. Transmission projects are going apace. We have said that there's a good demand on renewables for solar and wind energy. And I think overall capacity utilization in the industry is now nudging something like 74–75%. So fresh capacities will be created. So I think there's going to be more in terms of capex really coming up. That gives us the other big indicator, lead indicator of growth is the Purchase Managers Index. I don't know whether you will follow that, PMI. The Purchase Managers Index is a very fair lead indicator of what's to come. And that's now nudged up to 53%. And industry growth is showing only 1%. So you see what's going to come in the future. I think we are in for a pretty secular run on loan growth.
Looking at the opportunities that you expect to come your way, would you be looking at raising capital? You are very healthy as far as the CAR is concerned, but any plans for fundraising to make sure that you are not in a sweet spot as the opportunity comes?
I think we have enough and more capital for growth capital, enough and more. And we also anticipate that once the merger with Bharat Finance is actually completed, there will be a growth in our capital because that company is also excessively capitalized. So we expect our CRAR, which is now in that 14.5–15% range, to actually go up to 17%. So net, we don't anticipate raising any capital, at least in the near future.
Just wanted to check, by when will the Bharat financial numbers will be merged with your numbers?
So the effective date is actually 1st January 2018. So no matter what, when the physical merger takes place, the effective date is 1st January. So Q4 of last year and this full year will be consolidated numbers. So whether it happens in September or October is not so material because the numbers will get consolidated. So because the effective date is already passed.
सर, रिजर्व बैंक ऑफ इंडिया ने अभी एक गाइडलाइन जारी की थी बैंकों के ऑडिटर से जुड़ी हुई, तो क्या उसके बाद आपकी बैंक भी कहीं विचार कर रही है ऑडिटर बदलने को?
हमारे ऑडिटर्स के तो वैसे 3 साल खत्म हो गए थे, तो हमारे तो नए ऑडिटर अपॉइंट हो चुके हैं. Ernst & Young is a new auditor.
Mr. Sobti, one question on your corporate growth. You said 30% as compared to 28% of the retail. Probably the story is slightly different to some of the other banks. Wanted to get some sense about what is the nature of this corporate growth. Is it largely still brownfield? Are we also seeing some greenfield projects coming up?
Yeah, so well, want to take it?
So the entire growth is not related to projects. So there's all kinds of facilities. We have a very secular portfolio. We have working capital Of course, we have some project finance, we have other structured finance businesses. So all of those units have grown. It's not just related to greenfield or brownfield projects. So it's an extremely diversified growth.
You mentioned renewables and transmission, as well as some of these NCLT cases. But other than that, anything else?
Yeah, so that's part of the growth, but not the entire growth. Part of the growth comes from projects and NCLT. Partly it comes from increased facilities, comes from new customers. So that's how it's divided. So we have, the entire range of corporate products has gone up. Again, sectors are extremely diversified. Our book remains diversified. If you see our presentation, you'll see a sector-wise distribution of corporate loans. That distribution hasn't changed at all. So even though we have a growth, the distribution remains more or less similar to what you saw in the last quarter. We always have sectors that we are careful about. I prefer not to mention those sectors.
We work on the positives.
We work on the positives, not the negatives.
In terms of the SME growth, firstly, what is that for the quarter? And secondly, what kind of growth are you seeing there? Are people now borrowing beyond working capital? Are they going into expansion mode?
So SME, for us, the growth mainly comes from working capital and from acquisition of new customers. But they're all in only nearly 70% of our SME growth comes from working capital facilities. So again, we have a slide which will show you how our different businesses grow. And I think the quarter-on-quarter growth in mid-sized businesses is about 4%.
We'll show you a slide which is the construct of our loan book, broken between corporates, various segments of corporate and the retail one. That's so. You'll find it in the investor presentation loaded on our website as well.
Just wanted to check, despite such a strong loan growth, the net interest income growth has not been so significant. Any reasons for that?
So it's a catch-up game because the MCLRs have been increased with a lag. And if you see that the catch-up is already happening, because you are seeing Y-on-Y growth, right? Y-on-Y you're seeing 28% and 20%. You see quarter.
All right, that's about IndusInd Bank. Some more internals about the asset quality. The slippage ratio has come down quarter on quarter to 1.31 versus 2.68%. The restructured book is only at 5 basis points of their loan book. Get into a break then. On the other side, more in the markets.